everybody. Welcome to Asia Steel Markets Talking Points, September 2020. Thanks everybody for joining us. I'll start by just introducing the people who will be taking part today. For those of you who don't know, I'm Tomas Gutierrez. I'm Asia Editor and Head of Data at Kallanish. From Kallanish, we will also be joined by Anna Lowe, who is our steel journalist for Southeast Asia, and also by Maryam Wang, who is our senior analyst for China, North Asia. We will also today be joined by our guest speaker. This week, that is Harold Quek, who is strategic advisor at JFE Meranti. For those of you who don't know, Meranti was a company that spotted opportunities in the Myanmar market very early in the game, set up a project, and then later drew in investment from JFE Steel in Japan. At that point, I think we're ready to go into the slides. So I'm going to go ahead and move on to the presentation. So I will ask the panel to join me again after that. So I want to just kick off with the changes in the markets over the last couple of weeks. Obviously, there's been a significant change in sentiment. I've chosen iron ore here because it's representative, but really I could have chosen almost any Asian steel price. There was a very strong period going into September when expectations for demand were very high, and in fact, there was a very strong increase in demand in China going out of the summer. But that changed fairly sharply, partly because expectations were so high and the recovery in China did not quite meet those expectations. Partly for specific reasons. In terms of iron ore, for example, there were limits on restocking from port stocks in Tangshan, which limited mill restocking activity. But deeper than that, there's certainly been a change in sentiment. And just to measure that change in sentiment, only a couple of weeks ago during our scrap and iron ore webinar, we polled our delegates where they expected iron ore prices to be at the end of October for 62% FE fines. And 44% of them said that they expected prices to be at $125 to $135 a ton. Almost immediately after that, prices fell very rapidly down to around $114 a ton. Prices have recovered a little bit since then, running at around $117 a ton CFR for 62% FE fines currently. But clearly there has been a sharp change in sentiment over those 2 weeks. We'll talk a little bit more about that later. So what's really behind that? One thing to bear in mind is that Chinese steel demand has actually been very, very strong this year. A couple of months ago, or a month and a half ago, we revised upwards our forecast, which we issue in the China Steel Intelligence Report. We now expect crude steel output at 1.02 billion tons this year. Apparent finished steel demand we now expect to be up 7% year on year, 955 million tons. And end user demand we expect to be up 5.2% at 944 million tons. So quite big increases year on year, but it's important to bear in mind as well, by the end of October, more than 600 million tons of steel had been consumed in China. So that actually implies that if we have a peak period of demand in September and October, which currently seems to be the case, even though it hasn't met expectations, that actually implies a significant slowdown in demand in November and December, and also a slowdown in year-on-year growth rates. And so that backs up this view that once this peak is over, there's certainly some justification for a change in sentiment in China. One impact of that for the rest of Asia is that Chinese exports are starting to become viable again. For most of the year, China was the strong market. Everywhere else has been struck more heavily, at least in an economic sense, by the coronavirus. And this chart really just demonstrates that the lighter line is HRC CFR Vietnam, the darker line is FOB China. Obviously, if those lines are too close, then there's no room for freight, and Chinese HRC is really not competitive. You can see Chinese HRC was competitive before coronavirus, but since March, really no room to make deals until fairly recently, until September. Now there are starting to be some deals, and we'll talk more about that later. The question now is, to what extent will China return to export markets? During this period, it's also worth noting that ASEAN imports have fallen. ASEAN has long been a very significant net importer of steel. Globally, it's one of the most important centers for steel demand because it does have a structural lack of capacity, and so it is constantly importing. Until coronavirus, it was importing at a pretty steady rate of around 4 million tons a month. But obviously, since coronavirus, that has fallen, and net imports, in fact, fell even faster because exports have increased, driven by shipments to China. But overall, ASEAN demand, it's expected, of course, to be down in 2020, expected to rebound in 2021. So the question then is going to be, how does that rebound in demand balance with a recovery in production as well? And that recovery in production across the region, it's not only a Chinese story. If you look at here, we have a range of other Asian producers, and in particular, the important ones here are particularly India and Japan, but also South Korea. You can see there's obviously a very dramatic decline in production in April, and followed by a gentle recovery through to August. Now that recovery is expected to continue. In particular, we've had some news from Japan recently. JFE starting a blast furnace several days ago. Both Nippon Steel and JFE expect to produce 2 million tons each more crude steel in the second half of this year than the first half of this year, so 4 million tons in total. It's premised partly on a recovery in domestic automotive production. But there's also similar moves elsewhere. South Korea, July, we had a restart of Gwangyang blast furnace number 3, for example. But the other economy that's really driving a lot of this change is India. And on that note, I'd like to take you back in time slightly. So in our Asia Steel Markets Conference 2019, JFE Meranti, in fact, gave a presentation, as they will do in our next conference next month. But in 2019, they made this prediction, noting that China was already reaching peak demand and capacity, whereas India was seeing demand and capacity increase very significantly. They noted at that point that ASEAN local producers cannot ignore competition from India in addition to China. Now that was in April 2019. So let me just show you what's happened since then. This is ASEAN 6 imports from India. And you can see there had been a short spike before April 2019, but the really significant volumes came after that. Over 2019 as a whole, ASEAN imports from India were up 219% year on year. And in H1 this year, they've increased again another 59%. Now, bear in mind also that those imports from India have increased even as India has also found a new market in China, which is quite likely to be a short-term market. And so this possibly even understates the role of India as an exporter going forward. So on that note, I'd like to call our panelists back, and I would like to put that to Harold, and perhaps we can update our expectations on that. Thanks, Harold. Welcome to Talking Points. Thanks for joining us. I'll start off perhaps by just putting those numbers to you. Has the development of India as an exporter developed as you expected, and what's your outlook for how it will develop further over the coming year or so?
Yeah, thanks, Thomas. Well, we see India as a formidable force going forward. And as you have shown in the recent slide, it's clearly India is now a recognized leading exporter, in particular hot rolled coil. But supply from India will continue to be opportunistic, driven by the seasonal factors in India. And it's happening now. We are seeing less Indian exports since late part of August, driven mainly by the high seasons in India. So clearly, Indian exporters need to demonstrate their reputation by being a very consistent supplier. And we know that the three major players, GSW, Tata Steel, including AMT, certainly realize the importance of demonstrating to the customers about a long-term supply. So overall, we see that the supply from India will continue through to 2021.
That's an interesting extra factor. As a China specialist, I always compare to China, back in around 2005 when it became a net exporter, with Chinese capacity and demanding both increasing rapidly, but China gradually having overcapacity to export. In a sense, India has the same issue, but it also has this issue of seasonality. So do you think that that issue of seasonality with the monsoon and very kind of exaggerated periods of demand and low demand, is that a problem for exporters in providing consistency?
At this stage, we see that India steel producers will continue to have this problem because they haven't reached a scale whereby they could consistently meet the customers' demand right throughout the cycle. And I guess that is something that the Indian steel producers are working on, but it will take some time.
Anna, I'd like to just turn to you because I know for the markets that you look at, particularly HRC going into Vietnam, you see this very directly, this movement of India in and out of export markets. What are you seeing recently in that market?
Oh, well, India has definitely been out the market in recent months because they've had restocking post-COVID, and that has been very, very strong demand, domestic demand in India. But moving forward, Indian hot rolled coil capacities have restarted, and traders are telling me that they don't expect domestic buying can sustain at current levels. So they expect actually Indian exports to come back for December shipments. There'll be offers as early as mid-October in Vietnam. That's what they think. But obviously, all this will depend on whether China comes back. If China comes back to the market to export hot rolled coil, and the prices are very, very competitive, Indian mills may want to find other markets to sell its hot rolled coil because they are very price sensitive, as you mentioned, Harold. I mean, they are very price sensitive.
Thanks. Yeah, I think that leads on quite clearly to the next question. Maybe for you, Maryam, is now Chinese exporters are starting to come back into the market. How is that likely to develop after the October holiday?
In China, the market participations, they expect the market will see a slight rebound after October holiday. But how long will this rebound consist? That will be a question. That is because the weather is getting colder and China is getting in winter, especially in the North China. So the demand will definitely be limited. And then at that time, more supply will be available on the market, and they will definitely help the exports.
Yeah, interesting. So I think, as you said, for the October peak period of demand, I think we only have around 20 days left of the peak season. And for exporters, with this outlook for demand declining, it seems that they are likely to be under pressure to supply. Now, we'll maybe move on to some of the other market issues a little bit later, but considering this issue of supply, we also have other developments, not just India and China, but we also have local supply. And particularly in Vietnam, we have the increase in HRC supply over recent years. We had Formosa Ha Tin commissioning a few years ago, and now this year we have Hoa Phat's plant in Dung Phat starting to come up. Harold, maybe I could turn to you. How do you think that local capacity is going to impact markets in Vietnam and the region?
Well, Vietnam is certainly facing a huge overcapacity. It's clearly the leading producers like Formosa Ha Tin and Hoa Phat needs to export, and that includes the local coated producers, as the capacity currently in Vietnam far surpasses the potential consumption in Vietnam for at least the next 5 to 10 years. And I think the Vietnamese exporters have been quite aggressive in recent years. They have also established a sort of quality standard that the customers are now recognizing that they are quite close to the first-tier suppliers. And I think there's a lot of room for further improvement for these Vietnamese producers. So far, I think what they have progressed is quite impressive. And the fact that they have been able to export to China demonstrate that there is some confidence in the quality levels.
Yeah, certainly. This year has been quite a remarkable year for Chinese imports, and the imports, especially of billet from Hoa Phat and other producers, has been quite remarkable. Anna, going back to your HRC import markets, over the last few years, we've increasingly seen Formosa Ha Tin's monthly HRC price kind of helping to set a level for HRC market in Vietnam. Do you expect that to continue? Will that be changed by the competition from Hoa Phat?
Okay. Yeah, Hoa Phat is due to start, or is going to start, or has started commercial production. It's supposed to be in late September, early October. Commercial production of 100,000 tons per month. And Formosa has been producing at 350,000 tons per month. At the start, of course not. I mean, people are saying that, you know, there'll be you need some time to get the right thickness. You'll probably be supplying to the pipe making mills first. This is talking about Hoa Phat. So they won't be a threat to Formosa right now. But Hoa Phat has said that it plans to start producing at rated capacity, or it plans to reach rated capacity next year in 2021. This means that it will be wanting to reach 3 million tons a year, or 250,000 tons per month. At this stage, people are telling me they expect there will be a strong competition for Formosa. In fact, they think that the market may suffer for this. There might be some depressed prices coming out. I think that's what they are saying. At the same time, you know, last year Vietnam imported 10 million tons of hot rolled coil. So we are going to see some changes. If those imports are going to be substituted, they have to go somewhere else also. So it'll be interesting to see what happens. But I think it will be more competition for the mills, and it will be better for the buyers, I think.
Yeah, I think it's interesting that you mentioned that last point, that increase in production means that there's going to be some displacement of other volumes, because that's something that seems could potentially happen across the region. Across Southeast Asia, you know, it has quite a strong outlook for demand growth, and it's a major net importer, and that's attracted a lot of potential investment projects. You know, 60 million plus tons a year of capacity, which has been at least planned in the region over the next several years. Harold, maybe I could hear your thoughts on how sustainable are those investments? what percentage of those investments are likely to really be pulled off? Will they compete each other to death, or will people drop out?
In terms of hot rolled coil or coated products, Thomas?
Well, let's start upstream with crude steel, hot rolled coil.
For the integrated steel project. Well, I think for the integrated steel project, I see Vietnam, especially Hoa Phat and Formosa Steel, have really made very good progress. I think they do have a good understanding about what is the local market requirements, including what's the potential like for exports. And Formosa has got an advantage because they have two big investors partners, such as China Steel and Nippon. In the case of Hoa Phat, it's majority local, but they have very good, strong management who fully understand the business. So if you compare that with some of the other integrated steel producers in Malaysia and in Indonesia, the local producers, well, we know that they have been struggling financially for many, many years, with the exception of the new joint venture that is POSCO Krakatau Steel. So I think there will be some fallout because it's clearly not sustainable, the increased crude production to support the demand for the next few years. If you look at the CEC recent numbers, it said that it's going to take maybe 15 years, assuming the capacity were to run full steam. So that's going to be quite challenging. But if you look at what's happening now in Vietnam, 3 years ago, Formosa used Chinese first-year producers' prices as the benchmark, whereby they will just price $20 below whatever Chinese prices. But now it's the reverse. Formosa Steel is dictating prices into the local market, and they have managed successfully in the last 2 months to increase their prices by $20 to $40 for 2 consecutive months, and it's now around $550 to $560 per ton, which is a significant jump compared to the current imports at around $515, $520.
Yeah, that's right. And I think now we're seeing Chinese HRC export prices starting to cross over that $500 FOB line. That might come under pressure, but of course, Formosa also has its advantage in terms of its tax status and its delivery domestically to CIF, and also obviously an advantage in lead times. Perhaps I'd like to compare that. You mentioned Malaysia, but Anna, this is a market that you cover quite closely. Speaking of Malaysian investments, that's a project which is perhaps with a different management style. Could you perhaps talk about how that has changed over recent years, the building of capacity, especially at Alliance Steel, and the influence on the wire rod market?
I know that in Malaysia, the Alliance has pretty much kept to themselves in what they're doing, but I know that the Malaysians are tracking that they're exporting quite a lot of wire rod too, especially right now because it's been very, very quiet in Malaysia for demand. Malaysian Alliance Steel is more a Chinese steel mill, is what has been described to me, more than a Malaysian mill. It's not even a member of MISIF. So, but it's not so close to the market as I would say as Hoa Phat is, because Hoa Phat has been there for so many years selling the longs. So you know, I think that they will soon have to get closer to the Malaysian market. But at this point, I understand that actually they export a lot of wire rod to China. I think, yeah, Maryam also knows that also. They also try to sell within the region, but it's very, very Chinese way of doing things and trading.
Yeah, certainly. Maryam, I'd like to turn to you there. There's a lot of these, Chinese investments. They tend to be very large scale. They tend to be focusing on selling a lot of exports at very competitive prices, and no one's entirely sure how that's working out for them financially, but seems to be a certain investment strategy there. why is it, do you think, that Chinese companies are being so incentivized to invest overseas in capacity?
Okay, so I think there will be a lot of reasons, not only one reason, to push them up, push a lot of money in Southeast Asia countries to build a lot of steel plants. And I think the major one is to avoid the trade barriers, which means China is facing more and more trade investigations from different countries because the steel products basically is cheaper. And in terms of the Southeast Asian market, the countries they are now facing less trade barriers than China. So that would be the first and the major one reason for them to choose Southeast Asia countries to build steel plants. And in addition to this, I think the reuse of the backward capacities, which means the Chinese government require them to withdraw some of the facilities in order to improve the whole quality of the steel industry. But they want to reduce these steel facilities, so they just transfer them to Southeast Asian market and to make the most of use of the. And apart from this, in China, when you want to build a new steel iron making capacity or steel making capacity, you need to buy some of the quotas to develop your facility, not only just to build a facility and then you are able to use it. So this will be another question to Chinese steelmakers because it is easier for them to build facilities in ASEAN countries. And the last one reason I think it is quite simple is to get closer to their buyers and also to gain a lower cost of the raw material supply.
Can I subscribe further to what Maryam just commented? Yeah. China obviously see South Asia as the natural geographic footprint. And with what Maryam has mentioned, with all the new emissions control and a lot of regulatory requirements, it is clear that a lot of Chinese producers have to relocate. And there's plenty of opportunities in ASEAN, considering the consumption per capita, especially in Indonesia, Myanmar as well, are all extremely low. So if the Chinese were to choose which market that they would go to, is certainly ASEAN, the place for them to put in most of their investments. And with the aging population in China, plus all those strict requirements that the government is going to implement, and we are already seeing less exports from China previously, and that's all an indication of more to come from China. And the other strategic issues that we need to be aware of is that the investments in ASEAN would also help them to export their products to areas where they had faced import restrictions. So it's more about new business opportunities for them.
Yeah, thank you. So it seems that there's both kind of push factors from Chinese regulation and also pull factors in terms of demand in Southeast Asia, other places that we can.
Tom, could I just say also the other reason why they actually invested in Alliance came into Malaysia is because they have a very good port location in Kuantan. You're talking about location, is a very good port. It can go to many parts in Southeast Asia. And they've actually started exporting, I think, also some wire rod. They exported wire rod to Manila and all that, but it's because of the location in Kuantan. It's supposed to be very, very good.
Yeah, that's interesting that these port locations are important. I think especially as in China, the really good port locations are really dominated by some of the state-owned mills. Zhanjiang, for example, was very clearly going to go to Bao Steel. Harold, considering that there's all of this, huge investment of capacity, is obviously going to be very challenging years ahead for the industry as an aggregate. As an actual, how do you remain relevant in the face of that?
Well, this is certainly a very challenging area for local steel producers. If you look at steel manufacturing, it's not rocket science. It's all about how we focus on relationship management with our customers, with our suppliers, and including our key stakeholders. We need to focus on the production volume. Obviously, managing fixed costs is important, and the technical expertise and services. So we need to have the company a good value proposition where customers can believe that you can deliver and stick to the core values. And unfortunately, I think many ASEAN steel producers do not embrace all these values. So that is very pathetic, because if you want your customers to stay loyal to you, then all these values needs to be delivered so that they can then reduce their imports. Certainly, a lot of customers prefer to deal with the local producers because of short lead time. But if you can't deliver all those that I've just mentioned, then we are only going to encourage more and more imports. So it'll be just a lot of whining and whining in the next few years why we are not competitive. Why are people continuing to import from China and from other places? And if you look at what is happening in the last 2 years, China was perceived as a very cheap and low quality exporters of coated products. But they have already stepped up their quality. And the zombie mills, so-called zombie mills, have also disappeared. So if you look at now the supply from China, you can specify whatever paint products, whatever metal coated products that you want, and they have demonstrated that they are able to deliver to the sort of requirements that customers need. Of course, there's still a lot of improvement for them to demonstrate this sort of qualities.
Yeah, so there's a very different sense of a different style of strategy there. I think if you can say one extreme is building large-scale crude steel capacity and trying to cut costs and then hoping you find a market. You as a company have gone completely the other way. You have a very specific market in Myanmar. You've gone right downstream to begin with color coated. Perhaps you'd give us briefly just a quick update on the project in Myanmar and what stage it's at now and what the developments are in the coming year.
Okay. We started our paint line in March this year. And since then, the production has improved, and we have sold our products, mainly PPGL, to the domestic markets. And we have also exported our products to some of the ASEAN markets, including other far distant markets. And we believe our export sales will increase dramatically over the years. So now our focus is to ensure that we establish our brand to be able to produce a product that is at par with the first-class coated steel producers. And we are confident we'll get there. And obviously, there's a lot of work in the next few months for us to deliver all those values. And we recognize that with especially the imports in Myanmar, whereby it's dominated by a lot of cheap Chinese products, we need to be able to replace all these with the sort of products that we manufacture. And we got a suite of products that can meet various needs. Now, in addition to the paint line that I mentioned earlier, we also plan to commission our metal coating line somewhere by end of this year or latest early next year. Part of the delay was due, in fact, a major part of the delay was due to these COVID problems where we have difficulties to get people to come over to fix whatever is required to get the line running. Yeah. So it's an investment that is consisted of JFE Steel, which owns 35%, and we have Meranti Steel 20%, and the balance 15% each is by JFE Shoji, Hanwha, and Marubeni Tojo. So we are optimistic. We are confident that I think we should be able to enjoy a good market share, including exports in the years ahead.
Thanks. And just to put it in a little bit of context in terms of Myanmar, and Myanmar as a country currently, there's a little bit of color coding capacity. There's upstream capacity, but I think most of the upstream capacity is still idled, I think, right? The Minyang, EAF, and so on. There's currently no HDG capacity, is that right?
There is no, there's only one HDG capacity, that is POSCO Myanmar. They are very small, catering to only different sort of segments. And in terms of integrated steel capacity, there's none. There's a lot of talks about building an integrated mills, but so far we have not heard of any firm plans.
Okay, thanks. At this point, I'd like to kind of look a little bit at Southeast Asia going forward. And so perhaps I'll just introduce this segment with a poll. If we can have the first poll up on Southeast Asian steel demand. Thanks. So the question is, when will Southeast Asian steel demand recover to 2019 levels? Will it be by the end of this year, in 2021, or 2022 or later? We'll give you around 60 seconds or so to give your votes. Don't forget that all of these are anonymous, so please feel free to share your opinions. I can see votes are coming in, so we'll give you a little bit longer to vote, but then we will call it a day in around 20 more seconds. Votes coming in thick and fast now. Okay, and we'll call it a day there. So a fairly clear winner there. Very few people expect demand to recover by the end of the year. A very clear majority of almost 2/3, 63%, expect demand to recover in 2021. And 31% expect demand not to recover until the end of 2022. Perhaps to put that in a little bit of context, we have CIESE in its previous forecasts suggested that demand would fall 2.1% this year and then rebound 5% in 2021. So that would concur with the majority. But there's also among some analysts, and I would say I would agree with them, that 2.1% decline in ASEAN steel demand this year is maybe a little bit optimistic. Demand may have fallen more than that. So then there's a question over whether it reaches that level again in 2021 or not. Harold, what are your thoughts on this? Do you expect Southeast Asian demand in aggregate to reach 2019 levels next year?
Yeah, we believe the demand will pick up in 2021. Compared with 2019, and which was down a little bit, but I think with all the new investments and other drivers that's happening in the ASEAN countries, we expect a rebound of around 4 to 5% in 2021.
So what's going to be driving that? I mean, how much of that is going to be the fact that the region in general is seeing steady growth, and how much of it's kind of specific investment as a response to coronavirus and so on?
Yeah, the drivers will be mainly building and construction industries, which have been standstill for at least 6 to 8 months due to the coronavirus this year. And the home appliances industry will be another key driver that in fact has caused quite a bit of shortage in coated steel products in recent months, where there's a lot of diversion into that segment. And the other key segment will be the infrastructure spending, which has been stalled for many months. And we believe barring
Sorry, a bit of feedback there. Seems like try turning off your mic and turning it on.
Yeah, okay. Okay, I'll start again. So I guess barring any further continued COVID-19 problems, infrastructure will be a very big drivers in stimulating steel demand in 2021.
So a lot of this is then focused on construction and infrastructure, which has been driving growth before, but then it also has this acceleration because of government interventions in the economy, which tend to also be easier to do in terms of infrastructure. So in terms of the balance of products, do you feel that privileges the growth of long product demand over flat products?
We are inclined to believe more on the flat products. The area on flat products, I think, is now getting a more increased focus. And whereas long products, I think, have enjoyed for many years. And if you look at what is happening in the last 6 months, you'll see that there's quite a phenomenal growth in the flat products area. And as I mentioned earlier, Asean producers really need to step up their quality level and all those key points I mentioned earlier in terms of how to cultivate their brands properly to get customers' confidence. And there are a few, and I would like to say we are one of them in terms of promoting to the customers that we are able to produce a product that is comparable to the best in the world.
So that focus on branding is still very important.
Exactly.
How about in across the differences between different countries? We tend to talk about Southeast Asia as a region, but there's a huge contrast between the individual countries in that region. Do you expect to see some countries do better in terms of demand growth? Do you see some countries lagging behind? How do you see that playing out?
We see Indonesia will be a big potential market. Malaysia will likely to remain stagnant in at least the next 12 months. And we also inclined to see that Vietnam and Thailand will be also a very prospective growth market. Obviously, we like to see our own market, Myanmar as well. And I think we could see now a transformation taking place in Myanmar, where people are now recognizing that good quality colored products is the thing for the future.
Okay, perhaps on that, there's a question I've just seen from the audience. It's specific to Myanmar, but it could be expanded to other emerging markets. The question is, how are standards for the steel industry shaping up in Myanmar? So, industry steel standards and how that impacts the development of the market.
Yes. At the moment, standard is virtually zero existence. There's work going on with the government to establish standards. And that's the problem that Myanmar market is facing, because there's no standard. It only encourages more and more of these cheap imports. So we think that probably within the next 6 months, there will be standards that a lot of suppliers would have to follow.
Anna, I'd like to maybe go back to you in terms of the development of capacity. You know, we've talked a lot about large investments in capacity in Malaysia, in Indonesia, but perhaps then relating it to that last question, how do you see all of these new investments impacting the quality and the standards of Southeast Asian steel? Do you feel that they're going up, going down, or is it a very varied picture?
I know that countries like Thailand, they've always trying to get in new standards, the TISI, but you know, there's sometimes there's also people saying that they're doing all these new standards because not only to improve the standard of the steel, but also there are also barriers for imports, because you know it's much more difficult to bring in imports if you have all these new standards. So, but you have all the standards coming in place in Malaysia, in Indonesia, in Thailand. I like to think that the new projects that are coming in, those big Chinese integrated steel mills have good standards, because I've not heard from the market that that they are not good. They seem to be quite acceptable if they are being exported back to China. I think they're quite good in that way. But it's all mostly, so far we've only mostly seen longs coming out for those big Chinese investment projects. I think it's more tricky to do the flats. That's my understanding. I have not heard any problems with, Formosa, for example. Formosa is doing quite good quality coil. And I think it's good to have all these standards in place, because despite people saying there are barriers for imports, I think it's good for the industry.
Yeah, so it introduces some competition. Harold, I wonder, Anna mentioned there that for some of the large new investment projects in Malaysia and Indonesia, they're generally longs focused, and the Vietnamese investments, Formosa, for example, tend to be flats focused, and that also seems to correlate a little bit with the difference in strategies that you were talking about earlier, in that you have a different management style for Formosa Hatin than for some of the longs producers in other parts of Southeast Asia. Could you maybe expand on that? Why do you think that is, and which model do you think will win out in the end?
Well, I'm inclined to think the flat products area will be the model that will win out, because for the long products, they have established for a long time already. And for flat products, it's not so easy to get the sort of standard that is accredited. And so there's something that people like Formosa Hatin are progressing to make sure that they get world recognition in terms of the sort of ASTM or GIG standard that they must conform to. Now, Anna mentioned about the standard authority, like in Thailand, in Malaysia, as well as in Indonesia. Like in Indonesia, you got the SNI, SIRIM in Malaysia, and TISI. Some of these standards, I would say, are politically motivated. As Anna has mentioned, it is a form to reduce or import barriers. So they are not actually what we term as real standards.
So do you see that kind of politicization of standards, does that hold back the development of standards in terms of quality, or is it simply in terms of protectionism?
I wouldn't say all are politically motivated. Some are okay, is within the requirements that's required of standards, but there are some that is just a bit questionable.
Mm-hmm. Got another question here from the audience. This one's for you, Maryam. It's quite an interesting one. With China having so many investments now outside of China, and many of those are exporting into China. With Chinese demand over the next few years expected to decline, how will the Chinese government start to view those shipments by Chinese mills from outside China into China? Is China also likely to be protectionist towards those, or is it likely to be open to that import trade?
Yes, that is very interesting question, and it kindly sounds like a joke. But the interesting point is when I'm talking with Chinese mills about this Chinese investments produce steel products in other countries and re-export to Chinese markets. The mill sources, they said so far the volume is very limited because as everybody knows, China is a very huge demand country. So the current volume of these steel products will have not have a big impact to the Chinese domestic market. But will it continue to grow, and will it have more effect or influence to the Chinese steel market? It still needs to be considered. But for example, this is not related to steel, but it's the stainless and nickel market. China has already imposed some of the investigations of Tsingshan's products back to China, and Chinese governments have negotiated with Tsingshan to say you can't export this much products to China. So Tsingshan then switched the products they sell to China back. But actually Tsingshan itself is subsidiary in China. So yeah, this is a very interesting situation, and we are all glad to see how it develops in the following few years.
Yeah, I think Tsingshan is a particularly interesting example. State-owned Taiyuan Iron and Steel was previously the largest stainless steel producer in the world. It was overtaken by the privately owned Tsingshan, but then Tsingshan's investment in Indonesia suffered import barriers, so anti-dumping duties from China. So China imposing anti-dumping duties on a Chinese company in Indonesia. And then also in related news, Tsingshan has been restructuring some of its assets in China, and at the same time you have this possible link up between Baowu Group and Taiyuan Iron and Steel, which would return the state-owned company to being the largest stainless steel producer in the world. So it seems that there are interesting developments in the background where, again, Chinese import barriers could become politicized. So that may be another aspect of the question to look at going forward. Very interesting. Harold, I wonder if you have any comments on that. Is China's role shifts and India's role shifts as India becomes more of a constant exporter, as China becomes, as you said before, China's capacity consolidates, it starts to take a different role in the market. Do you think China will begin to behave a little bit more like another large steel country, protecting itself from some imports and promoting its exports?
Yes, well, we have observed China for a long time, and we could see that there have been interesting developments in the last few years with China's consolidation, and we have heard about this announcement by Bao Steel to acquire another one to be the largest steel producer in the world. And I think this will be just the beginning of more to come in China. So we will see more and more of these zombie mills disappearing in the longer term in China. And it's certainly the determination of the Chinese government too, to ensure that all this emission control that they have introduced is being implemented properly. So all those carbon footprint that they have been announcing will be something like zero by 2050. is something that they are just not bragging. Is a serious thing. And what we are seeing now is there's more discipline within the steel industries in China. And I think this will carry on more effectively in the years ahead, because China was regarded like a jungle 10 over years ago. Nobody knows exactly what the provincial government is doing, and people have got no idea what is happening. But now we could see that there is a good consolidation going on. But it would take probably another 3 to 5 years to see a big structural change in the supply landscape in China.
Yeah, I tend to agree with that. I think there's been a very significant shift in the last few years, and there's partly a political shift as well, in that consolidation of the industry has been a goal for China for 20 odd years. It's never really been able to pull it off, but there's been obviously a very strong centralization of the state in the last 5 years or so, and that has really helped to drive the growth of some of these state-owned groups, with obviously Bowel Group being the obvious winner in terms of capacity, but several other consolidations which previously would have been impossible are now starting to move forward. So certainly over the next 5 years, it'll be very interesting to see those changes in China. I have one more question from the audience, which in fact is again for Maryam, and it also relates to the future of China. China's been talking about developing its scrap standards and allowing greater imports of scrap. Maybe you could give us your outlook on whether China will allow scrap imports to increase, and what the status is with that policy at the moment.
So currently, Chinese officials is formulating the regulations of scrap imports, and now they have some of like the draft copies, but the official documents have not yet released. From the China's Scrap Association, the scrap imports will be restart from the second half of next year. So that will be in 2021. I saw some comments says it will be restart in the end of this year. But I do think that was too early for them. It's too quick to ask them to formulate the regulations. But the trend is China have a relaxed import quotas, so there will be more and more scrap will be imported in the following months, as we expected. But the official restart of the scrap imports will be in next year.
Yeah, so I think there's a whole raft of policies being discussed now, including the next 5-year plan, which in theory should be finalized by the party at the end of October and then voted through the legislature next March. So over that period, it seems there'll be a number of policy changes, and this could be one of them. Anna, maybe if China does become a major importer of scrap, obviously that will have a strong impact on other Southeast Asian scrap markets, Taiwan, Vietnam, for example. What will be the impact on those markets and for EAFs in Southeast Asia?
I think whenever China comes in to import anything, it's going to drive prices up. We've seen that happen. It's going to be very difficult for the mills to find low price scrap. They just probably need to maybe to import billet if iron ore prices come down. That is the thing that they have to go through. But when China comes in to import, I think we have no chance to they just have to pay whatever China's paying.
Yeah, I think last time China became a major importer of scrap in 2009, it was second largest importer in the world, very slightly behind Turkey, but not by much. So there is always a potential for the volumes to be quite significant. And we do expect, we also run our annual scrap report on the Chinese market. And we do expect China to be in a slight deficit for scrap in the short term, at least for another couple of years. So it could be an interesting development there. I have another comment from the audience, which, Harold, is related to your point on India. And it's maybe trying to problematize that a little bit. It notes that ArcelorMittal has recently sold its facilities in the US and bought facilities alongside Nippon in India, and suggests that perhaps ArcelorMittal is seeing a future in India and Asia rather than in North America. But the point that it makes is that India is losing competitiveness in terms of cost of production, and just asking how that might impact your expectations for India to become an increasingly important exporter.
Well, I thought India is one of the most cost-effective steel producers in the world, given that most of the major steel producers have got iron ore mines. And we all know that whoever has got a sizable stake in iron ore mines has a competitive advantage over many others. So the India producers will continue to stay competitive given what they have. So the only thing that probably they need to shape up the bureaucracies and all those other problems that they are facing. So overall, I think the fact that they have showed that their prices are competitive in the last 12 months clearly shows that they will be a very, very strong force in the years ahead. And they'll be focusing a lot in the South Asian market, including opportunities in China. I don't think the Indian producers will be focusing a lot in Europe, because the European market have been a basket case for quite some time. It's only recently that we see price rally, and including the US. So we'll be seeing more and more of Indian exporters in the next few years.
Thanks, Harold. We're topping over an hour now. We've been running our 1 hour standard time. So I'm going to wrap things up there. I'd like to point out that for those of you who have asked us questions that we haven't been able to answer, we will be sending out some brief written responses to those questions going forward. So expect to see that in your email in the next few days. Also, bear in mind that you can watch a rerun of this webinar on YouTube. That should be available within around 24 hours. So if there's anything you want to go back over, then please do. Also, I would like to point out that in late October, and 20th to 21st of October, we will be running our Asian Steel Markets Conference online. Please do join us for that. Joining us will also be Harold's colleague, Sebastian Langendorf, who is the CEO of JFE Meranti, and in fact one of the founding forces behind Meranti. And so also somebody who's got the experience to pick out interesting opportunities in the sector. So he's always very interesting to hear from. That will be the 20th to 21st of October. You should be receiving information about that by email, but please do feel free to contact us about that if you haven't received any information yet. With that in mind, then just to round off, thank you to all of you for joining us. Thanks, Anna and Maryam, for joining us, and especially thank you, Harold, for joining us today and sharing your valuable insights. I hope we have an opportunity to do this again in the future.
Thank you.